Hello guys and welcome back on the channel. In today's video we are going to backtest a new trading strategy, and this strategy was suggested me by one of my subscribers. He wrote me an email and in today's video I'm going to backtest it. If you want me to backtest your strategy, write me at the mail that I will leave in the description. I will do a video on it. Okay, the strategy is based on gold, and it can be applied on 1 minute chart or 5 minute chart, but I choose the 5 minute chart because it has less noise, and it only uses RSI divergence with a stop loss of 2 times ATR and take profit 6 times ATR, so risk to reward ratio 3. Okay, basically these are all the settings about this strategy. So now let's jump on the chart and let me show you some conditions about this strategy. Okay, let's start with this example. So the only indicator you will need is RSI and RSI 14, so period is 14. Okay. Now that you have RSI 14 on the chart, you are almost ready to trade. Let's add also ATR 14. Okay, ATR 14 means period 14, length period. Many softwares call it in different ways. It's period or length. Okay, what are the conditions of this strategy? So for long trade, you have to check that the minimum of close of the data are decreasing. So as you can see, they are decreasing slowly, but they are decreasing until here. And then you have to check that the minimum of RSI are increasing. So this we can see clear this minimum and this minimum. The minimum are increasing here, so minimum increasing here, minimum decreasing here. So after seeing that, RSI divergence is satisfied, and you will place your stop loss 2 times the last value of ATR. So ATR in this candle, the last value of ATR was, let's see, 2.72, so your stop loss will be the double, stop loss gap will be the double of 2.72. You will set your stop loss, your take profit 3 times stop loss. And as you can see, in this case, it was a success. Let's see a short one. So let's take ATR and RSI 14. Let's see, RSI 14. They are here. Okay, we don't need other indicators. Okay, so let's start by searching for RSI divergence. Okay, in this case, we have to check for the maximum of data they must increase. So here we can see that this is a maximum, and also this one, and they are increasing, but the maximum of RSI, so this maximum and this maximum, are decreasing. So this is a bearish RSI divergence, so you can place your sell order with stop loss 2 times ATR 14. So ATR 14 in this case in the last candle was 2.40. Okay, was here 2.40, and you multiply this value by 2, and after you have done it, this will be your stop loss gap, and you will set your take profit 3 times greater than the stop loss gap. Okay, and as you can see, this was another success. Let's see a last success. Okay, let's select ATR and RSI. Okay, yeah, that's good. So also here we can see, this case was a sell order. We can see RSI maximum decreasing, data maximum slightly increasing. So we can say that RSI divergence is satisfied. So you can open your short position. As always, 2 times stop loss gap, 2 times ATR 14 will be your stop loss gap. So in this case it was almost $2. You multiply this value by 2, so $4. Your stop loss gap will be $4. And as you can see, in this case it was again a success. Bear in mind that this strategy has a risk to reward ratio of 3, so 3 big successes. But how this strategy will perform over years of data, let's find out together, and let's see the result on the test dataset. And as you can see, 26.43 as our success rate. We can see it's not statistically profitable, it's profitable. The current balance is $1,000 and $4,070. With balance would have been 900 and some dollars. The starting account was $1,000 and the maximum balance was $1,500. We can see also that the number of trades was 800, so not a big number, but it's not such a big number. And the risk reward ratio was 3, max success in a row 5, max fails in a row 19. This is the confidence interval, and we can see other data, for example, leverage 50. We can see also that the average success rate in buy was slightly lower than our success rate on sell. Here we can see our Gaussian distribution telling us that it's not statistically profitable because here it's the limit of our confidence interval at 95% sureness. Here we can see our balance, how it changed during the time the strategy was tested. And let's see other information. Okay, here we can see for example all the trades that the software took. We can see that there are a few trades, and but what we can say about this strategy? Only by using RSI divergence, it doesn't seem to perform quite good. It's profitable, but definitely we have backtested a better strategy on this channel, considering also that as you can see it was not profitable with commissions, and without commissions not such big gains, considering also that it was backtested on like 3 years of data. But now let's see how this strategy performs on the test dataset, and as you can see it's 25.08. It's the confidence interval we have found before, so let's see. Yes, it is. So we can say that this strategy is not overfitted by using only RSI divergence, and we can improve it. So with this test we can say that at 95% sureness, these 2 hour success rate are not different, but that not such good results for now. Let me show you also the code I wrote for this strategy. This is the condition on the RSI, so RSI divergence. So as we can see, it was the divergence was checked on the last 30 candle, and we can see also the definition of divergence. A bullish divergence occurs when the minima of key 1, in this case key 1 is RSI 14, are increasing while the minima of key 2 are close, so are decreasing. Conversely, a bearish divergence is defined when the maxima of key 1, so RSI 14, are decreasing, while the maxima of key 2, the key 2 is close, are increasing. This is the definition of divergence on my software. This is also the formula for stop loss, and the open price formula was this one. Okay, now I have already downloaded all the trades, and let's try to see if we can improve the strategy. So these are all the trades. As you can see, they are going from 2021, 2022, 2023. So 3 years of data, and as we can see, we would have made only $500 profit. So 50%. We would have gained 50% of our starting account without commissions on 3 years of data. These are the average success rate in buy and sell. And let's see how we can improve the strategy. And in today's video, I use ADX. And what I have found that if you have checked for ADX 14 to be below 30 in at least 3 candles before the position was opened, we would have obtained an average success rate of almost 27%, so 2 points higher in buy, and in sell would have been 28. So let me show you an example of what I'm saying. So let's jump again on the chart. Let's add ADX 14. So ADX, it's this indicator. Okay, ADX is the blue line. So let's go on the last candles before the position was opened. Okay, it is here. Okay, let's go here. As you can see, ADX 14 in this candle was 16. Before was 15, and before was 15. So in this case, the condition is matched. There is not the condition was that you can open the position if at least one candle had is ADX 14 below 30. In this case, all of three have their ADX below 30. Okay, and 30 means the period of ADX. Okay, now that I have said that, let's add the condition to the strategy. I have already added it. So ADX 14 lower than 30 in the last 3 candles, and for all false, because we need at least one. Same things for sell. So let's run again the strategy, and let's see how this strategy performs now. As we can see, 27 as our success rate. Before was 26, so there was an improvement, 1 percentile points. This is our current balance, so we improved the balance of like $400. Now the maximum balance was $1,900, and the balance with commissions is $1,300. So definitely better than before. These were the results before. Okay, we can see it's profitable, and the software says that it's not statistically profitable. Let's check the Gaussian distribution, and as we can see, our confidence interval doesn't go past lower limit doesn't go past our success rate to break even, because for a 3-to-1 risk to reward ratio strategy, the average success rate to break even is 25. This is our balance and how it changes during the time the strategy was tested. Okay, we can see other information. For example, 26 as our success rate in buy, 28 in sell. We can see the confidence interval right now. The max successes in a row now are 4, the max fails in a row 20, and these are all the informations about this strategy. Also 700 trades, leverage always 50. But now let's run again the strategy on the test dataset, and let's see if it's improved or not. Sorry. Okay, let's run again. And as you can see, this is the new average success rate in test, 25. Before was 25.08, so 0.5% higher than before. These are the new result, $1,070 current balance. Before was $60 lower. The maximum balance is $10 higher, and the balance with commissions is $80 higher. Uh, yeah, that's it. But with this improvement, now the strategy is overfitted or not. Let's check the confidence interval. So the confidence interval is this one on the training dataset, and average success rate 25 is 25.16. Is the confidence interval? Yes, it is. So we cannot say at 95% sureness that these two average success rate are different. Okay, that's it. In conclusion, I would say that this strategy with these settings probably is not one of the best. It was not statistically profitable, so not good results. Maybe on the 5 minute chart, maybe on the 1 minute it would have performed better. I don't know, but 1 minute chart is 1 minute time frame is a bit dangerous because there is more noise, and also opening position. It's not so easy because the price change very fast. So it's difficult to open at the price you have said. Okay, I think it's everything for this video. I thank again the guy who wrote me this email. I said it also again. If you want me to backtest your strategy, write me the email that I will leave in the description. But before ending the video, I also remember you that these are not financial advices. I'm not a financial advisor, and trading is very dangerous. I'm not responsible of any use of this strategy or other strategies shown on this channel. Pay attention, trading is very dangerous. But if you have enjoyed this content, I remind you to leave a like, leave a comment, subscribe, and see you in others video. Bye!